joining me for further analysis on those markets making moves is Muhammed Wagley from Sasfin Wealth. Muhammed, always a pleasure and a good afternoon to you.
Good afternoon, Olitanda. Thanks for having me.
All right, a lot to discuss. Maybe starting off with general market sentiments today. Mostly green screens, another red day for resources there. The globe waiting to hear what U.S. inflation may do. Just help us take stock of where you think we are at this point.
Yeah, it's quite interesting. We've had sort of basically this is the second green day in a row this week, so it's quite a good start. But when I look sort of at the markets yesterday, we had been sitting at around 18 Rand 30 on the dollar, and by and large, that seemed to me Rand strength. And I've got to be honest with you, I really couldn't make sense of that. And then subsequent to that, today I think subsequent to Mr. President's news about the NHI last night, we've come back slightly. I think what we're seeing here is just a bit of choppiness, really. It's neither here nor there. I wouldn't say there's too much sort of driving, and I don't think we're going to see too much movement. At least up until the weeks leading up to the election. But you did touch on this a bit earlier, from an offshore perspective. We've got Mr. Powell speaking a bit later today. I think people are worried about a hike, and truth be told, I'm not necessarily too sure where this narrative is coming from, because he's been very well defined in saying that we're not going to see a hike, and we're really looking at a November cut. So I think we're looking ahead to clarity a little bit later today. I think he'll speak around 4, and that has the potential to impact markets. But leading up to that, it's been more or less choppy. Yes, we've had a lot of company specific news, but I think really the big thing is at the end of the month, at least with relevance to the local markets, and we just look ahead to that.
What we are also seeing is red screens all around for our telcos. Vodacom, MTN, Telkom. We don't see this happen often. Of course, with the MTN, it makes sense. They came out with a trading update today, a first quarter update. It really is going through quite a difficult time. A lot of those key metrics are moving in the wrong direction.
Yeah, absolutely. And this follows on from Vodacom's results, which came out on Monday. I think, we were relatively disappointed with Vodacom's numbers. And then MTN came out this morning, and, you did touch on it earlier. But, most of those key metrics came down. And it was, I'd say, attributable to a lot of things that you could say aren't within the scope of MTN's control, like the geopolitical tensions, the weakening of the Naira. There's an ongoing civil war in Sudan. And that, sort of directly and then indirectly affected them as well, so they suffered, I suppose, in the period. And the outlook isn't that in the near term things are going to change anytime soon, and I think that makes sense. Inflation is also playing a part, putting a bit of pressure on those numbers, but medium to longer term they're still relatively positive on growth opportunities going forward, and I don't think that that's necessarily too optimistic. But yeah, on the day it does make for bleak reading, but I would say that this was by and large sort of expected. And if we look at the reaction, I think the share price lost around sort of 3% thus far today, which isn't great, but it could have been worse, I suppose.
Now, another big one for the day is truly what we're seeing coming out of Anglo's there. We know that Anglo's went on to put its assets under review. I think it was an important, journey they were taking with or without what's happening with BHP. They've come back now and they've made some really wild, I would say, Mohammed, commitments to restructuring the business. Markets don't like a restructure as a word. I'm keen to get your thoughts on how markets have been received, but also your thoughts on some of the proposals put on the table by Anglo for itself.
So it's quite interesting. Now, you did mention that they were going to, have a review, Anglo's, that is. And I think they mentioned this, right at the beginning of the year. It could have been January or February. So we knew that there was some sort of restructure or change coming. But I think you hit the nail on the head in that, the BHP news really accelerated this. BHP basically came out and said, well, we're looking for that copper exposure, and we'd really like you guys to do away with the South African exposure that you do have. And I think despite the fact that they've been rejecting sort of these offers, the Anglo shareholder is looking at it and they're saying, well, hang on, what are we doing sitting with this exposure if the company coming in trying to buy you guys doesn't actually want this? So I really do think that BHP sort of accelerated this, but something was really in the works. And truth be told, I think Anglo Anglo's actually needed to undertake something like this, and re-gear towards, let's say, more future sort of facing commodities. And copper really is one of the big ones. You've got the case for electric vehicles and really electrification in general, and that's really where they want to be, and that's really why BHP wants them.
I must also ask you, PGMs as a whole, now that Anglos has come to this conclusion, earlier this year, Coronation came out and said that they were completely, disinvesting from PGMs as a whole, Muhammad. And, we know that we're in a cycle here. We're at the bottom of a cycle, hopefully, and, we are expecting this to turn around. But such permanent decisions are being made about the future of PGMs. I'm just wondering what that means for this asset class in total, really.
No, so it's an interesting one. I think you make a good point when you note that we're sort of at the bottom of a cycle. I won't speak to sort of what Coronation's done. I'm not entirely sure of the thinking behind that, but there are still use cases for PGMs, and chances are it looks somewhat likely that we will see a bit of a run in 2025. But I think the question becomes, are we sort of at the bottom now? And it's very difficult to call. From my perspective, there's still plenty of use cases. There's still a case to be made to have some platinum. It's more a case of, I suppose, when do you get in? Because you want to be there sort of on the way up. Perhaps that might be a bit more relevant towards the end of this year. But I'd be a bit skeptical to be holding now. You don't want to sort of run the risk of holding a falling knife.
Another interesting one, I think, just quickly touching on Canal Plus and MultiChoice here. We know Canal Plus keeps, increasing their shareholding in MultiChoice. Is this not value destroying? I'm very keen just to get the thought here on accumulating, the stocks while they're supposed to be putting together this circular. Of course, there's no rules against it, but from an investor perspective, Mohammed, I'm not sure what to make of that.
Look, it's quite interesting. A couple of weeks ago, we were probably at 40%, and then a few weeks before then, we were at even less. And it does seem fairly cynical, truth be told. I think it's more of a sort of leverage play, to maybe get some of the MultiChoice execs onto the table and, sort of more inclined to accept something a little bit sooner, and it does seem like it's more a case of that. Not necessarily too sure for the time being how sort of value accretive it's going to be, but it does seem to be sort of a leverage play here.
And then before we move on to your stock pick, let's talk about Equitas, the property fund there. They've gone on to declare a dividend. It looks like the property sector, various ones actually posting this results out today. Not an even picture. And I think that's something certainly worth noting. Some have done well, some hasn't. It really is very portfolio, based, and Equitas no different.
Yeah, absolutely. I think, I guess I sit here in Johannesburg and, we tend to be insulated. I think things have been relatively weak here, but, you hit the nail on the head when you say it really depends on the mix, and not just sort of your geographical mix, but also the type of property that you have, whether that is sort of office space, residential, and, without having seen sort of Equitas's results in sort of too much detail, that's really sort of the trend. I think, with reference to Baldwin numbers that had seen quite some time ago, they were in Cape Town and they were quite stellar, so it really just depends on where you are. And I think within the property space, you've got to sort of be quite calculated in that regard and have a look at that mix and see where the exposure is, because it is very important and will dictate, sort of the investment return there.
Well, we'll be speaking to a few of those CEOs in a bit, Mohammed, but I'd like us to reflect on your stock pick. But first, let's take a look at what counters your industry peers are loving.
I'm picking Investec tonight. So I think that the current management team, CEO Fani Titi and his team, have done a fantastic job to reposition the business and refocus on their core strategies, which is banking and wealth. Recently, we saw Q1 results out of Rathbones. Investec now owns 41% of Rathbones, a UK wealth management business. AUM growing quarter on quarter, and the share price has gone up quite nicely, which should feed into Investec's share price. I think we'll see them start to focus more on the growth aspects within their own business, so growing the account holder base. They've been talking about doubling that base, which I think is doable over the next 5 years. Also, they've got a nice opportunity in business banking, which A lot of people talk about Capitec's opportunity in business banking, but Investec has a nice opportunity there too.
Yeah.
And then they've got a fantastic niche business in the UK with their high net wealth individual business there too. So I think that if you add all that together, you get a 20% RR a year and includes a 6.5% forward dividend yield.
I'm going offshore. So this more speculative pick today. So this isn't held in our global equity portfolio, which is a little bit more conservative, but it is held in our thematic AI future tech portfolio run by Viv. And it's Tesla. So Tesla, I mean, has been absolutely clubbed this year. It's down 30% year to date, in dollar terms, and you can really understand why. The EV market is becoming incredibly competitive. They've had to slash prices on their cars to try and stimulate demand. Around 85% of their revenue is actually still car sales, but that's not why I'm buying it. Like I said, more speculative pick. I'm buying it in my personal name as well, because you're obviously buying into the tech company that run by Elon Musk, and you're buying into full self-driving, and the potential that on the 8th of August they won't have a Cybertruck-esque release. Instead, they're going to have a successful release of robo-taxis. And if that's the case, and if they really do pivot into robo-taxis and full self-driving, which they have been promising, granted, for a long time, like I said, it is speculative, and the stock price has reflected that with its 30% decline. I think it's worth a punt.
I'm going to go for something which is sort of a bit defensive, if you can call it that. I do like Standard Bank. I think Standard Bank the share price has not performed as much as the other banks, and I think it's set to catch up with the rest. I do believe that we are getting closer to a interest rate cut environment, which will possibly take part in the second half of the year. The banks are all very cheaply priced. I think there's a lot of momentum in the banking sector. And I think Standard Bank's going to do the catch-up work in the sector, and you should be doing well out of that share price.
All right, Muhammad, keen to get your thoughts on some of those, Investec, Standard Bank and Tesla.
Perfect. So let's start with Investec. I think the analysts there sort of made mention of their 41% ownership in Rathbones. I think they did quite well in that respect. But right at the end there, he touched on the high net worth business in the UK, and I actually quite like that from a sort of geographic diversification perspective. It is a good business as well, but I do actually always like the sound of getting a bit of that offshore exposure just as a bit of a hedge. Then your last analyst, the Standard Bank one, also mentioned that just banking in general here is very sort of undervalued, and from that perspective I think this is really a good play. And then when we look at, I think the most interesting one here, which was Tesla, and your analysts actually hit the nail on the head there. People are looking at this company like it's a car company, and they're very much looking at it like it's an electric car company. So just earlier in the week, or perhaps toward the end of next week, the US came out and said that they'll be charging, I think, 100% tariff on Chinese electric vehicles. And funny enough, those Chinese electric vehicles after the tariff are still a lot cheaper than the American ones. And I think, things like that have just been putting a lot of pressure on Tesla and I suppose companies like Tesla. But this is fundamentally, an AI company. And I think that's probably the way that we should be looking at it. I am also a long-term holder of this share. And I've been using sort of some of the drops this year, maybe to get a little bit more exposure. But this is one that you're going to have to be patient with. It's going to be quite volatile, and I have to note that. So very much in agreement with your analyst there. I think the gentleman's name was Gary. And then the last one was Standard Bank. In fact, within the banking space, I'd say this is probably my pick as well. Hasn't performed as well as some of the other banks, and like with the rest of the sector, is quite undervalued. They've got a really high dividend, good forward divi as well, and it does make sense that they could pick up a little bit of momentum. But it's again, one to watch really.
With that said, Muhammad, which counter is your favorite this afternoon?
So I'm also going for something a little bit more speculative, and I'm going to go for Trade Desk in the US. Now, just to give you sort of a flavor of what the company does, is they provide sort of an independent exchange for clients to purchase digital ad space. Almost think of it like a stock market, but instead of purchasing shares, you're buying ad space. Now, just with reference to that, I think it's Peacock who is going to be showing the Summer Olympics on their platform, and you can sort of buy ad space for those Olympic Games on Trade Desk platform. And that's sort of the I guess, in a nutshell, what this company does. But relative to their competitors, relative to Facebook and Google, which sets a price, and, if you don't want to pay that price, your ad is not going on their platform. This gives sort of the consumer a lot more autonomy of a price. In addition to that, their approach is a lot more data-driven, and they collect a lot more data, not just on, the person buying the ad, but the person sort of seeing the ad, the end consumer as well. So basically, their viewpoint is if you are going to see an ad, which, we're always watching ads, it may as well be something that is relevant to you. And in this regard, they are absolutely excellent. So I'll say that they're well positioned for future growth, and they benefit from some key trends. The obvious one is, the move away from sort of traditional TV cable towards streaming. And that's nothing new. We're just going to see more of that going forward. And I think, on that basis, this is definitely something to consider if you've got sort of a long investment horizon. So if you're the type of guy that's maybe looking at Tesla and saying like, I might take a punt here at these levels, this is also another share that perhaps you can take a look at too. It's one that I quite like. It is expensive and really always has been, but I definitely like this one for the long term. So my stock pick is the Trade Desk.
Certainly a different one this afternoon, Muhammad. Thank you so much for your time. It's always a pleasure chatting to you. That was your midday markets update with Sasfin Wealth's Muhammed Wagley.